Hey everyone, me Kevin here. In this video, I want to share a secret with you that nobody is talking about regarding Bitcoin. It's a secret reason that I actually think is the perfect reason as to why Tesla is investing into Bitcoin, and it's one that could be a huge catalyst in the future. So you gotta know about this. I'm gonna explain this in detail. But first, let me get out of the way the basic stuff. We already know that Tesla has about 19 billion in cash. We know that they took 1.5 billion of that and invested it into crypto, Bitcoin specifically. That's about 7.5% of their cash that went into Bitcoin. We already know that this is probably going to lead other Fortune 500 companies to say, let's get into Bitcoin as well. It might lead other hedge fund managers to say, dang, for us to stay with it, we got to get into Bitcoin. Because the reality is, if hedge fund managers don't stay with the trends, they end up getting phone calls like, yo, hedge fund manager, how come you didn't buy into Etsy when Kevin told you to buy it at $79? Yo, how come you did not get into Redfin at $10 when Kevin told you to buy it? And what about EXPI? Kevin just told you to get into that at $42 and you didn't do it. And you didn't do it either when he said, dude, it's at $80 and hedge funds are about to clamor over this once this actually goes through the media circuits. Like it's gonna blow up, it's gonna happen. And what'd you do? You didn't buy it? I'm taking my money out. That's the downside that hedge funds face, right? Hedge funds face this downside of people basically saying, yo, you suck at investing. I'm taking my money away from you and I'm giving it to somebody else. So obviously companies want exposure to Bitcoin. Like these are the basic things that we know. We know this. This totally makes sense. But there are some things that don't completely make sense that I want to talk about a little bit more. And the first thing is from ARK Invest. And the second thing is the big secret that relates to Bitcoin. Okay, first, let's talk about ARK Invest. So this was put together and sent out by Yassine, analyst on cryptocurrency. Really brilliant mind when it comes to cryptos. If anybody ever has access to this person, please get them on my podcast so we can talk about crypto and go deep here, okay? And I'm not talking about like, well, maybe I am. Maybe I am talking about like Rust. We're gonna go deep. Oh man, Rust. Okay, we're going deep here. So this is a post from Yassine this morning. And he mentions, hey, there's this interesting pattern here. Back in 2018, or I should say the end of 2017, searches for Bitcoin skyrocketed. But those searches really didn't come back over here, which since hedge funds don't have, like one hedge fund searching for Bitcoin could represent, billions of dollars, where one retail investor searching for Bitcoin might represent $10,000. Obviously, there's this potential that the higher the search trends, the more retail investors are searching for a particular stock or cryptocurrency. This is a super loose connection, but it is one that ARK here makes, and it's one that I tend to agree with. They're basically making the argument here that, hey, it's quite possible that this larger and sustained rally of Bitcoin that we've had over the last year, where crypto, Bitcoin has gone from 10 to 44K, was driven largely by institutional investors. In fact, that's kind of the conclusion they make here. The different search dynamics suggest that institutions could be the incremental force behind Bitcoin. And then they make the opposite conclusion for Ethereum, suggesting that retail investors are potentially driving the Ethereum boom right now. This is an interesting trend change. And what this suggests is, hey, if Elon jumps in on this Bitcoin bandwagon, it's entirely possible that these institutions could absolutely drive another rally in Bitcoin with even low increases in search trends, because that's what happened here. Sure, we had a spike in search trends, but we had nothing like we had in 2017. And again, ARK is concluding that that's because the institutions are more interested in Bitcoin. That doesn't mean the retail investors aren't, it just means less, right? The ratio has been skewed. So this is really interesting. I like this, and make your own conclusions on this as well in terms of Ethereum versus Bitcoin. That's not the point of this video. The point of this in relation to Tesla is just to say, hey, if Elon spawns another one of these amongst institutions, hey, there's no reason you couldn't see Bitcoin go again from 10,000 to 44. So maybe, is it going to 4x again? I don't know. Maybe will it double again? Can we get to $105,000? That's a little bit more of my target, 105 plus. We'll see how high it could end up going. But this is some good information to have. That's part one. Now, let's talk about part two, which part two is a little bit more of the Tesla secret. So we've got this conclusion on search trends. Now, the Tesla secret. All right. So the Tesla secret has to do with some specific verbiage that nobody really understands in the SEC report that Tesla put together. Here it is. The verbiage right here says that these assets are going to be considered indefinite-lived intangible assets. Okay. So I, prior to hearing this, had absolutely no idea what that meant. Here you go. Digital assets are considered indefinite-lived intangible assets. So I did a little bit of hunting, and I found something really interesting. I found this right here. This right here says that when you are looking or understanding an indefinite life asset, you have to do something known as impairment. And this is when you file your quarterlies or your annual reports. You have to do this thing called impairment. And so let's explain what that means. We're going to keep this nice and simple because a lot of this is like, I mean, it's complicated for me, and if you're watching this, it's going to be complicated too. So we're going to keep this very simple. I'm going to read this line here. An impairment cost must be included under expenses when the carrying value of a non-current asset, like a Bitcoin, so if the carrying value is, let's say, 1.5 billion, we'll call that the carrying value. Okay, got it. So an impairment cost must be included under expenses when the carrying value of a non-current asset exceeds, so when this is greater than, the recoverable amount, which would be the current market value, what you could sell it for. So in other words, if Bitcoin sells off and it goes down to, let's say, 1.2 billion, right? So basically, Tesla just lost $300 million in that example, right? So in other words, if Tesla loses money on Bitcoin, they have to expense that loss, even if they're just holding it. So it's kind of like you looking at your Robinhood going, I got $1.5 in my Robinhood worth of Bitcoin, and it just went down to 1.2. Well, you get to write off that 300, that 0.300, on your taxes as a loss is what the corporations here are saying, which in Tesla's case is equal to $300 million. Well, folks, take a look at this. This right here is the net income sheet for Tesla. Let's go ahead and look at these quarterly net incomes, okay? This gray line over here. Their last quarterly income was $369 million. In other words, if Bitcoin went down 20% based on whenever they bought it, so whatever they paid for it, if it goes down 20% under that, in that same quarter, Tesla's going to have to recognize that as an expense. So we're going to have a line over here that says negative 300 because of, Bitcoin, right? That means Tesla's profit will literally go in the toilet, and it will look like they lost a crap ton of money. Even though their revenue might go up, let's say in the next quarter, who knows? I mean, the next quarter, Q1 is usually really slow for Tesla. But anyway, let's say it goes up to $400 million in revenue. And then they lost $300 million in Bitcoin. Then it would look like they only made $100 million in net income, which is less than the prior 2 quarters. It could basically lead Tesla stock to sell off just because of the Bitcoin. Like, that Bitcoin alone, because of the volatility, could absolutely have a big effect on Tesla's stock price. But wait a minute, I said this is brilliant. Why is this brilliant? Okay, well, when you show less income, you pay less taxes. Here's what's fascinating though about Bitcoin. When you have a loss or in value of Bitcoin, you write it off. But when you have a gain, so if this goes back up from, let's say, 1.2 to $1.5 billion, then you do something called reversal of impairment. So if you have a reversal of impairment, you're going to do the opposite. You're going to take that 300 million you wrote off, and you're going to show that 300 million as income again. So you could literally foresee a time where, let's say, Bitcoin sells off 20%, you could have Tesla have $400 million of revenues, but because they have, let's say, 20% losses in Bitcoin, they can only show 100 million in revenue. What happens? Tesla has a big sell-off because idiots on Wall Street don't understand what the hell's going on, and people panic and freak out because they don't understand the Bitcoin adjustment that's going on. And all of a sudden, you could have a really cool opportunity to buy Tesla at a cheaper price if Bitcoin sells off, right? If then in the future, and let's say quarter 2, Bitcoin goes back up to what they paid for it, They would then, let's say, have again $400 million of revenue. They would recognize that $300 million as income again. Boom, it makes them look really, really profitable. Okay, now who knows? Maybe Wall Street will be smart enough to realize, well, we can adjust for the Bitcoin fluctuations and it doesn't matter. But that's not always likely, because people, like, if Bitcoin goes down, there are enough people on Wall Street that are like, yeah, I understand you could just remove that $300 million in losses there for Bitcoin, but y'all were the idiots who invested in Bitcoin. It's your fault. I'm selling your stock, right? Like, I think that would happen. If Bitcoin falls 20%, it's going to really hit Tesla's revenue really fast. And I don't think all of Wall Street is going to be as savvy enough to make that adjustment. Then, if it goes back to what they paid for it, Tesla adds that money back in. But here's the kicker, okay? Here's what's crazy. So remember, this right here was assuming the Bitcoin went down to, $1.2 billion in value, right? Right here, let's say it goes back to the $1.5 billion they paid for it. Guess what happens? And this is the cool part. Guess what happens if that $1.5 billion investment turns into, it doubles, okay? The Bitcoin doubles that they bought. It turns into $3 billion. And it turns into $3 billion in, let's say, Q4. And Tesla has $400 million of revenues in Q4. How much do you think is going to get added in revenue because they just added basically $1,500 million in Bitcoin? Well, you might think, oh my gosh, that's amazing. They added $1,500 million. That means they had a $1.9 billion revenue quarter, right? Wrong. This is the actual crazy, amazing, beautiful thing about what Elon Musk is doing. The correct answer is when your Bitcoin goes above what you paid for it, according to the rules that I'm reading off this, lecture thing here, you do not actually declare any additional income. So you declare 0 additional income. Instead, you just mark it on your assets and your equity sheet. That's it, not on your income. So you only expense it when it's a loss, but when it's a gain over what you paid for it, you don't show it as income. So in other words, the bottom line of this, this brilliant secret, in my opinion, is that Elon Musk is basically in this position now to, if Bitcoin goes down, basically be able to depress the value of the stock. And if people who get it are then able to buy in, hey, you just got an opportunity to buy Tesla cheaper. But that's only if Bitcoin goes down. If Bitcoin goes up, the rules don't say that you have to recognize it as income. Boom, you win. You make money, you build your asset without actually recognizing income until you actually sell the Bitcoin. When you sell the Bitcoin, that's when it matters. And usually that's how it works for us in real life too. Like, okay, so let's say I bought $10,000 worth of Bitcoin. If it goes to $15,000, I don't pay taxes until I sell it. Well, the same is true with Tesla, right? But with us, if our $10,000 in Bitcoin goes to $5,000 and we sell it, that's when we get the tax benefit. We get that loss. But if we don't sell it, usually nothing happens. Well, according to these rules, with these accounting principles, Tesla actually gets to recognize that loss. So it's a little confusing, but when you put the pieces of the puzzle together, it's like, oh man, that could actually swing the stock price. And so if we see a Bitcoin crash, be prepared to see Tesla have a really interesting quarter or stock potential moves, which is kind of scary because if you've got margin outstanding and you're heavy on Tesla, you can have some fluctuations. Now, I want to show you where it says that you do not show income when it goes up. So this is where it says, when an intangible asset impairment reverses, in other words, when it goes back up in value, when the value is regained, right here, the increase in value is recorded as a gain on the income statement and a reduction in the accumulated blah, 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 blah. Okay, so basically you show it as a gain. That's what I showed you, is showing it as a gain again. That makes sense. Then it says, up to the amount of the impairment loss recorded prior. So you show it as a gain up to what you wrote off as a loss. So you're showing that income again. But then get this, okay? This is the big one here, folks. This is the big line. Increases in value in excess of prior impairment loss is directly debited to the asset and credited to equity. In other words, if the value goes up, you're not actually paying any kind of income. or you're not paying taxes on that, you're not recognizing it as income on that. Now, I want to be very clear here. I'm not an accountant, okay? I am a dude on YouTube who is trying to understand this, and I pulled this pamphlet up here, which is really cool. It's by lumenlearning.com. Anyway, you could probably Google this. If you just Google indefinite life impairment, it'll come up. But this to me is a potential game changer for earnings reports at companies. And if you're not well versed in cryptocurrency to make the proper adjustments because Bitcoin is volatile, you're going to be really confused by earnings in the future. Now, also keep this in mind. I make this clear pretty much every time I talk about Bitcoin because a lot of people, well, let's just say this. I still hear in the mainstream people say it, in my opinion, the wrong way. People still call Bitcoin inherently risky because it's volatile. To me, those are two totally different things. You have to break that apart and separate them. Bitcoin being risky means there's a chance it's going to go bankrupt. Bitcoin being volatile means it goes up and down a lot. Those are two totally different things. In my opinion, there's no risk of Bitcoin going bankrupt. I mean, there would have to be some fatal flaws in blockchain. And so far, anytime we've had problems with blockchain has surprised us with how resilient it is. So barring a fatal flaw in blockchain, I don't see there being a risk with blockchain. Is Bitcoin going to be volatile? That is up 20%, down 20%. I mean, just like Dogecoin, okay? Yes, absolutely. Two totally different things though. So let me know what you think. If you are an accountant, I beg of you, please, if I misunderstood something here, please let me know. If you have a different perspective, please let me know. I invite you to please beat me up so I can better understand what the HE double hockey sticks is going on. For now, I'm hanging my hat on something I Googled. Hopefully you appreciate what you found here. And if you did, consider sharing this because it's going to have big time implications for Tesla stock going forward. Thank you so much for watching. Please consider subscribing. Make sure to consider joining the course in the link down below or any of the courses using coupon code HODL. And folks, we'll see you in the next one.